Like,
Yeah, so I pushed it back a couple of days. So let me just get rid of this thing. You can see my mouse, okay?
yeah.
Okay, so let me get rid of this distribution zone too. Oops. Okay, so yeah, I mean, here's the shoulder, here's the head, and here's the other shoulder, right? I mean, so people like to use all kinds of names. When I describe certain patterns, I want to make it as simple as possible. So I just call this, this is to me, this is a balance that had a breakout attempt, right? And then we didn't get the breakout, right? So usually what happens when you have a false breakout, which is a major pattern I like to identify, I'm not saying you could predict here that we were going to get a reversal. I mean, granted, at this point in time, this was not the all-time high. So you had basically at this point in time, blue sky. So you have really, there is no real, I mean, other than the fact that like, you know that this thing could climax at any point because it's getting super extended. There's not really anything hard above it. So, but once you see this bearish engulfing pattern that takes out a days, this whole thing gets engulfed pretty much. Not quite taking out the top, but for lack of a better word, this is a bearish engulfing pattern. And then, so that's usually what happens when you get that false breakout. It comes hard back into bounce. And what happens is it'll pause or something, and then it'll usually just end up tanking and you'll get a retest of the bounce. And in this one, I don't even think it did pause. Yeah, we kind of had like a sideways down day. It kind of made an attempt at that 38.2, which would have been a great short given the magnitude of this move for a tradable reaction. Right, but then when it gets down into this buying tail area, you're getting pausing, and of course I'm looking at this moving average at some point, which is coinciding with this launching point of directional conviction here and the bottom of bounce. So that to me is a stronger zone. Like if you were trying to like fade the low of the day, you're fading a weaker zone, but you could get, just know that if you are taking trades here, you're trading these for tradable reactions. You're not thinking this is going to be a strong enough zone to get a total reversal. But
Well,
once,
and Matt,
yep,
I have a question.
yeah,
If you see a bearish engulfing on the daily, right, and that's all
yep,
you have to go off of is one daily bearish engulfing,
correct, yep.
is it more probable that, we're seeing more to the downside, or how likely is it that, you'll see bullish engulfing after a bearish engulfing?
Well, so you see on this day, we weren't quite as extended up, and then we got a breakout out of that smaller balance. And then we got sort of like, we pulled back into it, but as you can see, it's a smaller bounce and we had a little buying tail. That's like showing that the buyers are coming back in, right? That's like, okay, I'm going to make a sideways up call. But the problem with the head and shoulders on, once it actually came back in, we came up and then we got this down move, right? Is that, where were we? Where was the day at? Okay, so this is the shoulder that played out, right? So it came back down here, tested the bounce, which is this launching point. That would been a high odds move because it's better than all this crap in between. Like if you look at this as one big balance, even though you can break this down on smaller time frames, of course, which I recommend you do, you're gonna have multiple possibly actionable zones on this stuff. That's only like what a day trader would care about. If you're a swing trader, you're going for, and a day trader, you're going for the high odds. So this would have been blue at this point, which would have been an automatic fade zone, right? And then when we came up here, right, we started to get, so this is what I was talking about in the channel. So let me just remove this box. Who do we got on? We got Brandon, Christopher, John, man. Okay, we got some, nobody. Okay, so at this point in time, right, you're thinking, okay, everyone can see this head and shoulders pattern as resistance. Obviously, this is a pretty strong resistance zone. You can see we touched here, we tried to get up there and we couldn't. If we go back in time, this was also the launching point of directional conviction, which brought us down there. So like that to me is a better zone than that little tail here. That tail's just like a small thing. We're going to break it. So that's why I made the zone there. And yeah, so on 11-2, I made that sideways up call. But basically what I was talking about during these days here is that at this point in time, right, we had a pullback to here. And so the question is, are we going to go back down and test the zone again? Or is this the beginning of a possible bull trend resumption of this trend here? And what can help us determine that, and this is not easy. I would have been totally fine if you're like, you know what, Matt, I'm not trading today. I know a trader, a friend of mine who's been doing this for 30 years that made that call. He made an uncertain call, and I would have respected that on this day that here, which was 11:02. So what I'm seeing, I saw this in this channel, right? As we come up here and we pull back, and this is when I do use indicators, right? I see a very notable pattern on the CCI indicator called a Shamu. which, I posted in the channel, which basically looks like you're going from one end to the bottom. The longer the better. I like to see something close to 200, but this is good enough. We're coming back up and we're getting near the this purple zero line, right? And there's setups that involve that called a zero line reject, but the Shamu is we pull up into it, we break the purple zero line, we don't reject it. You see that corresponds with this, and then this candle pulls back into the purple, right? And it doesn't mean the next day it has to pop up, but I said, oh guys, this is the beginning of a Shamu pattern. Like I kept watching it the whole week. I said I said, okay, if it doesn't happen tomorrow, it's gonna take time to play out. You can go back and read some of those threads. We got Ross now, so I'll just back up a bit. Hey, what's up, Ross? I'm basically we were doing a little TA before Manu gets speaking here, and this is what we were kind of debating. We have this head and shoulders pattern, right, which is basically like a false breakout attempt. Like here's the balance that we were in, right, or something around here. Notice we had a false breakdown on the bottom after that, but here was the false breakout, and now we're coming up to the shoulder again on this head and shoulders. And what I was basically showing everyone is how I came up with this sideways up call on 1102. And prior to that, I said, hey, we have this trend continuation pattern, which would be continuing this trend, and overpowering this intermediate term downtrend, which is on its last leg, in my opinion. And because, I mean, this zone has been tested 1 time, 2 times, and you can even count this, 3 times. And it's like, we know the more times we test the zone, the greater the odds that it can break. So, which side would we bet on? And one of the things that was helping me, we got people still coming. All right, yeah. One of the things that was helping me was that Shamu reversal pattern. And I think there was something on a smaller time frame. I was talking about a beauty principle too. I'll go into what that is. All right. And the more and also, which was also confirming the Shamu reversal pattern. So obviously against it was the head and shoulders reversal. With the Shamu was for the upside. And what was really, hang on a second, there's a question in the chat. Yeah, okay. And what was confirming it was like, look how mediocre these downside candles were. It's like, man, the market was falling in agony. Like the bears really weren't that strong. And the buyers were kind of putting that up real. And then we had the Shamu even pull up more past the purple line. Yeah, I'm going sideways up, on top of it. So that was for it. And when we were watching it real time, we were talking about, well, maybe I'm uncertain, maybe I'll just stay out. So let's just go with the uncertainty argument for a second and why that was the case. Notice that we were usually, when we're in the middle of a very strong distribution zone, I can't really recommend, I mean, there's no edge, right? I mean, we know we fade extremes, right? So just from a larger time frame perspective, we're not at the edge of any side of the balance. But at the same time, I've watched this market enough where I know that when I have these extended high volume nodes or these supply demand zones where they transact, that's when trends smash out of them, right? So I'm like keeping that in mind. I'm like, well, trend days do start from VPOCs, because I wrote a whole list of pre-market conditions that I see that increase the odds of a trend, rather than just, hey, Matt, is this an open drive off the open, which is basically like an abnormally large candlestick? And I'm telling you, if you just take open drives indiscriminately, you will not, it's not a winning edge. I mean, that if it was that simple, I wouldn't be doing this every day. It's only in context, but you might want to take that. And this could have been one. I'm not saying it didn't. I have to go on the smaller time frames. I made a sideways up call, which says I'm not necessarily looking for breakouts. I'm definitely not shorting. That's the rule. And I want good trade location. So by definition, if a breakout has bad trade location, I'm not looking for anything momentum based, unless there's something so out of the ordinary that, okay, the candlestick off the open drive was so big that I'm just going to wait for a PC setup, which is a pullback continuation. I'm not even going to buy the open. But I just love that Shamu worked really nice. And then the other thing that I saw simply that was arguing for this upside move was this other concept that I learned from one of the guys at Minus Tunchman. I worked with him for years, because he saw them. If you have 30 years of watching markets, you have some kind of abstract ways of looking at things that you're not going to get on YouTube. And one of them was this concept called beauty. It's really hard to describe. I don't even know how I could really do it. But basically, I like to think that there's beauty in patterns. There's things repeat, things are cyclical, and there's harmony in pairs. So I'm saying, okay, condense, beauty principle up. Well, how did price behave at a similar price that creates beauty? Well, we clone this. So, beauty principle something was definitely in favor of the upside. And I really weight this on a sheet too. I have sheets that weight all this stuff. And then whatever's the more, I just go in. It kind of takes, the system takes the whole, oh, am I right? Am I wrong? I wonder, because I'm blaming everything on the system. So I only reward myself really if I follow my system. If I take a trade that's not in my system trade that even turns out to be right, that's actually bad. It's a bad habit because over a large number of trades, I know that's a losing idea. And that's really what I'm training myself to think in. I'm training myself to think in probabilities over a large sample size. And then with the edge in day trading is you get the frequency. And, a lot of people say, well, you can't beat the big guys. The big guys have all the advantages. Well, if the little guys can get in and out of the market really quickly, and the big guys take weeks, if not months to offload, you tell me who's got the advantage really when it comes to getting in and out quickly. So yeah, I mean, the beauty that I saw, right, condensing, and then it was just going to pop up and break that. But it actually didn't break it. It broke it a little bit and then came back into it. And then I didn't make the call last night. I actually was really sick yesterday for about 20 hours straight. So I was talking to Brandon about this. As we came up into it, right, and we got the confirmation pattern, we are getting this sharp zero line reject, which is not quite at 200. So it's not like I'm thinking this is going to reverse. But this is a zone that we popped up into on some pretty strong volume, and we pulled back into it. So I would have made a sideways call. It's kind of uncertain at this point. But actually what happened is it's more a little bit sideways downish. Pulling nicely right into that nice moving average. And, I think that we might have a sideways up tomorrow. We'll see how this closes. I mean, if this closed actually below this candle, then I'll be like, okay, now we're probably gonna get that wide double bottom. That was a fake out, but it's not reversing this day yet. So yeah, that's kind of how, that's just how I, what I was talking about in the channel, the beauty principle combined with the Shamu, which since we have some new folks, I'll just show that one more time. I did actually post a picture of it from the CCI, which is Woody's commodity channel index. But what happened is we had to kind of adapt it to Bitcoin a little bit because, every market's a little different. And I don't use the internals. And that's actually why, if you guys trade the ES, you have and there are some ES traders, Miro and whatnot. They're not here. They're coming. Miro said he's coming, but there are ES traders in the room. And I used to trade it. But one of the awesome things about it is that I get to use certain indicators that show me what's going on underneath this index, because this is an index of 500 stocks based on their cap weighted average. And, those indicators are super useful as confirmation tools on zones that aren't really strong. And you want to check, basically it's a sustained momentum or short-term momentum gauge. So it confirms the price actions you're reading in the candlesticks. But with Bitcoin, I don't have that. And that's why, I really appreciate Mana for reaching out to me and asking me about his indicator, because I needed something that would kind of just double check what I'm doing. And what I'm really doing for a day trade is the basic strategy. The system is, I'm fading, which is I'm going against the price action. So if it's going down, I'm buying, going up, I'm shorting. I'm fading the key reference zones on non-trending days, right? Which most of the days are, probably not going to trend just statistically, but in certain environments, they do trend more. So we'll just pause a moment because we do have we're just going to pause a moment because we do have our second speaker on. Hey, Chart Picasso, thanks for coming on. We got Mono, and we're going to have a few more people coming on as we're going to get going here. I'm just basically doing a little bit of TA, and then Mana's going to come on, and then we'll have you come on after, and I'll allow you guys to share your screens if you guys want to share anything. So thank you guys both for coming and everyone on the call. So just going back, just because Chart Picasso just came on today, what I was just showing them real quickly, and I'll just recap real quickly, and then Mana will come on. Let's see, what time is it? This was a short TA for me today, but that's okay. 12:59. Yeah, this was really short today. But basically what I was just showing them is, some of the criteria I was looking at on both sides of a balance of what's going forward or what's against it. On this day here, which for the last couple of days, even as soon as it was hitting up into this day, I was talking about on the CCI, I was basically just showing them, despite the fact that we were in this distribution zone, which is, some might argue that there's little edge there because we're not at any extreme, it's a little more difficult, that there isn't really an edge. But so that's when we got to kind of drill down a little bit. And one of the tools that helped me was two principles. One is a pattern on the CCI, which I'm about to go over, and another principle called the beauty principle. And what happened was these were mediocre candles coming down. So to me, like, the market was falling in agony. And on top of it, we were getting this nice We started from here, we pulled back and passed the zero line reject, but we didn't get a rejection. We pushed up over into it and then we pulled back into it. That's a beautiful, that's why maybe you say, hey, I don't want the short side anymore. I just want the upside. That's what a sideways up call says. It says don't short. And you could just see nicely Bitcoin had that pop into, now we're not clearing, the head and shoulders yet, but that was a nice trade. The other thing too that was on the side of the trend is that even though we were in a distribution zone which has little edge based on location, oftentimes trend days, especially if we're an extended high volume node, start off of that. So they often launch off that like a compressed spring. So that was another thing on the side of that. And then what I was showing them, just quite simply, it's a concept I learned from trading partner and mentor I had from way back. He's been trading the markets for like 30 years. So he's got some abstract ways of looking at things. And just one of the concepts he developed is just this concept called beauty principle, which is just looking for beauty or, there's harmony in pairs or repetition. So I want to see how price was behaving around that time. And I want to see if it can possibly repeat itself and create some beauty. And I was seeing this compression and a pop. I said, that's beautiful. I said, oh, similar candlesticks here, compression around this price. I said, we're probably going to get a pop if from the beauty principle perspective. And for that category, I had sideways up. And I didn't make a call yesterday because I was sick, but if I was talking to Brandon about it, I probably would have made a sideways call just into this resistance. We're not sure exactly what's going to happen, and we are getting a slight reaction there, but we're holding at this nice moving average here. So yeah, when it's clear, it's clear, and when it's not clear, it's not. But that CCI Shamu reversal or trend up continuation proved pretty nicely. So yeah, that's it. So what I was going to do after I did that basic TA is that if any of the traders had any questions, and a bunch of them that did, I guess they're coming late, so we might have to either get to them later or not. Yeah, Manu, unless anyone has some trading questions to go over, I'm going to give the floor to Manu. So I guess not, man. It's all yours, buddy.
Hey, Matt. Thanks for that. So yeah, let me just share my screen one sec. I'll put together a quick slide deck.
I hope I'm not disturbing with my keyboard.
I think I have to allow that.
Oh, yes, you have to enable that.
Okay. So there you go.
Okay.
You guys hear me?
Yep.
All right.
Now, do I have to stop sharing my screen for you to see yours? I think
you probably do. Can anyone see it?
Oh, now I see it. Beautiful. Okay.
Okay, perfect. Okay, cool. You can see that okay?
Yeah, I can see it pretty good. Everybody else can?
Okay, perfect. So yeah, so essentially what I want to do is give a bit of context and a bit of background. So essentially just a bit of background on me. I spent probably 15 years working for a couple of UK investment banks in sales and trading, mainly foreign exchange, but also commodities, interest rates and inflation. And then about 3 years ago, I left and became the CEO of an electronic trading venue for banks and hedge funds called DMA Link. So DMA Link does probably about $1.2 billion a day of volume in London and does about $900 million a day of volume in New York of fiat FX, exclusively with banks and hedge funds. And essentially, about a year ago, I was approached by a couple of our existing clients, and they asked us if we could try and replicate the business model that we had for fiat FX for digital assets, because nothing actually exists. So that's kind of what Divinity is. That's kind of where we were. And again, one of the big things, I'm a big fan of artificial intelligence. I'm actually a board member of an Italian AI company called Axion. And essentially, I've been working with those guys for a couple of years, trying to really build and refine what's available to really the trading community and try and push the envelope in terms of artificial intelligence. So I guess it's probably worth giving a bit of context about AI. So again, AI is probably one of the most abused terms I have ever heard. And essentially, every single business that I speak to seems to be using AI. The truth is, most of them are not. And just to give you a bit of a background as to why AI and why now, you've got to kind of cast your mind back probably 10 years or so. So if you look at what happened in 2010, so Moore's law, i.e. the price of a transistor will essentially halve in price and double in capacity every 18 months. That kind of stopped. And the reason it stopped was because unfortunately you need a couple of atoms in between the transistors to make microchips work. Thankfully, the very smart chaps at NVIDIA came along and then repurposed the GPU processor. And the reason this is relevant is because if you think about a string of instructions that are processed by a CPU, because the GPU can process them parallel, if I have 1,000 GPU chips, I can take those instructions, slice them into 1,000 pieces and process them all at the same time, which means that I'm 1,000 times faster than a CPU processor. Or I can process 1,000 times more information at the same time. So that's why essentially we are now in a position where we can actually start beginning to float around the edges with AI. And essentially, if you look at the other reason, of course, is data. Back in 2010, there wasn't enough market data. Now there are huge amounts of market data. And essentially, it's the combination of the data set and a combination of the processing capacity that has allowed us to push forward in terms of what we can actually do. Does that kind of make sense, Sam?
Yeah, anybody, you have any questions so far?
I think this is really cool.
Yeah, we have some Singularity Net fans in the chat.
Oh, okay, awesome. Well done. This will be right up their street. So essentially, what we did was we basically used a technique called deep learning. And you've probably all heard of AI and machine learning. Well, deep learning is basically a subset of machine learning. And the difference between deep learning and machine learning is essentially with machine learning, you're limited in terms of how much data you can process. So to put into context, machine learning is great if you have, let's say, 1,000 data points within a data set or 10,000 points of data within a data set. Deep learning is really good when you have, say, 1 million or 10 million or 100 million points in a data set. So it can process much more data. And one of the benefits of this is that you can actually give the AI agents much, much less information, and it can still give you valid inferences. So for instance, we chose end of day data because it's pretty useless. And we worked on the premise that if we can get this to work on end of day data, this is going to be pretty bulletproof as a strategy. So essentially what we did was we chose 6 assets. We chose Bitcoin, Ethereum, Cardano, Binance, Polkadot, and Monero, because I love Monero. Essentially we went about building the context features. So we had 6 target assets, which were those, and then we had basically 126 context data. So things such as the next 36 coins by market cap, excluding meme coins like Doge and Shiba Inu, just because I don't really understand how they price or work. They're normally kind of 100% anomalous. A whole bunch of on-chain context data, and then also some financial market context data as well. So essentially what that did was it gave us essentially the following data set. So this is a breakdown of every single piece of data that we've used to essentially plug in to the actual AI agents and basically create the actual outputs that we have on the anomaly detector. And essentially what this really does is that if you look at the first portion of the top left of the page, you've got essentially a whole bunch of metrics that we've used really for the 36 target features. So for instance, if you look at, say, Ripple, we'd look at the rate of change, we'd look at basically the relative strength, we'd look at a whole bunch of different indicators for a couple of given periods. The second table basically shows the 43 on-chain context features. So again, clearly exchange inflow, outflow, we thought was pretty important, and it turns out it's phenomenally important. And then on the right-hand side, what we have is really a bit of a breakdown of the 48 financial market context feeds. So again, what we found was when we were training the AI agents, we found that actually by having things like Brent, silver, gold, you actually saw the AI pick up things much, much faster than if you just had the context data. So we've kind of kept them in. And essentially what we tried to do was to say, look, what is it that drives price action in markets? And what typically drives price action in markets is really capital flows. So if you see a movement in the 10-year yield, let's say you see a rise in the yield, means the price is falling, people are dumping bonds. Well, where's that money going? Is it going to precious metals? Is it going to equities? In combination, with the volatility index to say, actually, are people quite concerned about what's happening, or are people oblivious to it? So we've kind of taken all these bits and pieces, we've kind of merged them into the data sets that we train the AI agents with. And that basically gave us the raw output. The next thing that we did, which was pretty neat, was we did basically post-processing using Axion's proprietary fractal interface. And this is quite cool technology. So this was invented by, I think, NVIDIA in, 2018, 2019. And basically what this does is it uses a technique called generative adversary network. So you have two banks of AI. So you have two groups of AI agents, one that is creating images of human faces, and one that is discerning, is this a real image or is this a made up image? So for instance, this image that we have of this woman here is 100% synthetic. This person does not exist. And in fact, if you're interested in finding more about the methodology behind this, there's a great site called thispersondoesnotexist.com. And essentially, you can go into the maths if that kind of thing is floats your boat, basically. But this is what makes it really unique, and this is what makes it radical, is because what we did was we said, hey, the geometry of a human face is fractal, financial markets are fractal. What if we use this for post-processing? Will it help us make better inferences? And the answer was yes, exponentially better inferences. And I believe we are still the only people in the world doing this. Principally because we haven't told anyone we're doing this. I suspect if we start talking about it publicly, people might start copying. But anyway, this is many years of research we put into this.
Incredible.
Which is why, Matt, I kind of thought, this would probably resonate with you in the channel, because I kind of thought, it's quite funny that we've used this. And yeah.
It's an interesting
this looks very similar to steganography detection tools that I've used in cybersecurity, only this analyzes every piece of the metadata down to the timestamp. This is amazing. Like if we had this in cybersecurity, we wouldn't have any problems with red team, blue team activities. It would just be all right there. This is brilliant. Absolutely brilliant.
Well, I mean, look, it's got lots of applications. I mean, my focus has been kind of almost exclusively on financial markets, because my background is sales and trading. But yeah, you're right. Absolutely, the use cases are pretty phenomenal. And what we basically have done is we've just used initially just end of day data. I'm looking to try and get this down to hourly, and then hopefully tick data as well, which will be very useful. But just in terms of some of the outputs that we have, so this is just, again, just a couple of screen prints from what came out. And what you can basically see is that it managed to pick up something quite large anomaly-wise on Bitcoin on the 20th of October at about 1 a.m., which is about 7 or 8 hours before we saw the initial start of the rally and then the breakthrough of the all-time high. And then the next day, we saw the anomaly scores drop down a little bit. And then the day after, the 22nd, we saw them go absolutely mental, absolutely off the charts. And what what the anomaly score does is it gives you a graduated score. So it gives you not just the fact that there's something anomalous, but it gives you a scale as well. And to be honest, I'm still kind of working out how to interpret some of these things. But if I look at the chart on the next page, which I just put together very quickly, this is basically the point in time where the anomaly detector went off and roughly what it was saying. So if you look at the top left, so basically over here, it essentially said that there was something anomalous on the horizon. The trend at the time was kind of sideways to slightly lower. So again, it's quite good for indicating potential trend reversals, and it did on that occasion. Second signal the next day, again, suggested there was another slightly smaller order magnitude anomaly, but still on the horizon. Didn't really pick up the fact that it was a continuation of the trend rather than a reversal. So didn't quite work there. Again, here, the third data point, which was the day after, again, very high score. The trend at the time was sideways to slightly up, and it correctly predicted a large move that was basically a trend reversal. And then the two green bells basically represent the fact that there were no anomaly scores, which typically means that whatever trend is in place will probably continue. So here the trend was kind of sideways. That's exactly what the market did. So look, I'm still kind of finding my way around this because it is so new, and we have, obviously we've only been in production for about 2 weeks, so there's quite a lot of interpretation. And again, look, if anyone would be interested in getting access to the Telegram channel, just ping me a DM. I'll add you to the channel. And any feedback you give us, or anything you think we should do or try and add to make it more user friendly, I'm all ears, because I want to try and make sure that this is essentially gives everyone a bit of competitive advantage versus what exists. Because as far as I think we are the only people to use, or we're the first people in the world to use anomaly detection for crypto. And I can tell you one thing: this technology is already used by some of the world's largest exchanges to make sure that there's no anomalous data at the end of day closing prices for their equity markets. So it's technology that works, and it's technology that's being put into production. And what I'm trying to do with this is really give access to anyone who wants access to it pretty much for free, in order to give people a bit of a competitive advantage. Now, obviously, look, clearly, if we're going to have tick data, there's incremental costs that we need to bear, and we will probably charge some kind of subscription fee, but that's going to be probably content and material exclusively for hedge funds rather than for individual traders.
Manu, I was wondering if could you go over the different gradients on that previous page and what you think they mean?
Yeah, sure. Okay, so basically so I chose the colors, and essentially what you have is zero is green. The reason it's green is because it means that there is no anomaly detected in that particular target asset. So the probability of there being a large asymmetric move is somewhat reduced. When we have a score between 0 and 25, it means that there's basically a low probability that there could be an event on the horizon. And essentially, if you look at the which is yellow, and then essentially 25 to 55 is slightly darker, and then above 55 is typically red. So again, above 55%, typically large order of magnitude move is expected within the next 12 to 24 hours. That's roughly the time horizon that it works to. Sometimes it's out, so sometimes it actually predicts a move that happens 48 hours subsequently. And we're not entirely sure why, but the level of accuracy seems to be slightly different. So for Bitcoin, about 70% of the time, it accurately predicts a volatility event. For Cardano, it's weirdly much more accurate. It's about 85 or 86% of the time it predicts a volatility event. So this is roughly where this graduated value comes from. I kind of entered it, and that's where we set the benchmark, because the score actually goes from 0 to infinity, which is not a lot of use. So we've just rebased it to a percentage.
That's an absolutely perfect time horizon for us day traders.
Yeah, absolutely. Which is why I chose it.
Now, are you experimenting with maybe something that would be of a larger time frame that would only come out maybe monthly or every couple of weeks? Or is this basically you would be checking this every day kind of thing? No,
so look, we did want to push it to see how we could stretch the data. The problem is, end of day data is difficult to do much with. Weekly data is just not very valid. And looking at look, so I guess the way to look at this is, if you look at market cycles in conventional assets, you look at, real estate, you look at equities, those market cycles will last 5 years, 10 years, 15 years, maybe several decades. In crypto, you have the entire life cycle compressed into a couple of years. So I don't think there's that much value in looking at those longer term product. I mean, maybe there is. Maybe if you're a long-term investor, then yeah, perhaps you can manage your portfolio. But again, I kind of made this for people that were day trading. So again, the next iteration of this will look at hourly data. That seems to be exponentially more accurate than this in terms of predicting moves during the course of the day. Although the one thing that did completely screw the AI was the change in time. So the clocks went back in Europe on Saturday night, and it's just stopped working. But anyway, we fixed the issue. And whilst it can see things that no human can see, it can't work out that clock's moving back 1 hour is not that big a deal.
Yeah, and if just in terms of like the ethos of what you said you want, what your vision was for it, I think the enzyme protocol, which is a decentralized asset management tools that are basically affordable for anyone who wants to do a little hedge fund, this would be perfect for that, because I know they have a huge array of tools that comes with it, and they're always adding things.
Oh, sure. Okay. Okay.
Yeah, I'll see if I can get in touch with her through my friend who was putting up a hedge fund at the time and was working with her, and he wanted me to manage it. I guess it never got in funding. It's still possible, but I haven't heard from him in a while, but he's a member of the channel. I'll see if we can get in touch with her, because you're right. It's like, these tools usually before would only be available. Like, this is the reason why she left. She was working at Goldman Sachs, and she wanted to, basically, that's why she was attracted to crypto. Like, these tools wouldn't have been available to us before the blockchain. It's incredible. So thank you for doing what you do.
No, listen, no problem at all. No problem at all. I'm glad I can try and add a bit of value to the community as well.
Yeah, I mean, the suite that she has, she basically just gives her story. She said that even when, she was managing $1 billion, she actually was one of their youngest hires. And what happened was when she left, she tried to do her own hedge fund in traditional markets and quickly realized that I can't afford this. Like, it was $100,000 a year just for the lawyer fees, all these different costs that basically prevent us, like, just a mom and pop hedge fund from getting started. But over there, it's awesome. So
yeah, look, absolutely, I'd be delighted to speak to her. And look, I think the other thing that I'm also looking to do is build out some algos. So I noticed some really funny. So the world I come from, FX. I remember when I first joined markets in, when was it? Probably 2003. You had guys sat there basically looking at euro dollar, euro sterling, and pound dollar, and seeing little price differences, and then buying and selling manually, arbitraging. Then again, a lot of the electronic trading guys came along, a lot of the high frequency Chicago funds came around, and then suddenly what could be done by a human needed a computer and algo, and suddenly you had windows of maybe a minute or two to try and make money. That got reduced to 100 milliseconds. In crypto, this still exists. So I noticed a lot of cross-exchange opportunities, and we did test an algo basically on Bitmart and Gate.io, looking at the top 10 most liquid cryptos, and it was doing really well. It was generating about 3.5–4% net of fees per day. But again, we were just messing around. We weren't really taking it particularly seriously. But it occurred to me that maybe we should look at this in more detail and see whether there's a way of really trying to capitalize on this and really, I guess, try and disseminate this tech to more people.
Yeah, when you guys were aggregating your related markets in that one series of lists, I mean, what kind of things are you looking for in your related markets? Are you just divergences and exhaustion things, or some proprietary things like that too?
So sorry, why do we choose the particular markets, or what are we actually looking for?
Yeah, what are you guys looking for?
So this is the really good thing about the methodology we've used. So we've used essentially unstructured data, and we've used unsupervised learning for deep learning AI training. And what that basically means is that when you have unstructured data, no one tells you, or no one tells the AI what is anomalous, what is not. And when it's unsupervised, we just give the data to the AI agents and they come back with the inference. So what it kind of removes is the user bias. So what we initially did was we had semi-structured, where we gave it some parameters, and it was useless because, again, I have no idea what something anomalous looks like in Bitcoin versus someone else. So we realized that the best way to do it was to try and take the human element out of it. So in terms of the actual features it picks up, I mean, I can generate. In fact, I've got an entire paper that talks about this, but I'll be honest with you, it's written in principally Python and in maths that, I'll be honest, is above my level of intelligence.
Yeah, we actually do have some programmers on here, so they might be more familiar with Python than us traders. But yeah, it's interesting. Sure. Yeah, it's funny. It's like a trader's best friend is always a programmer. I've had best friends in LA were always programmers. Yeah, well, that's awesome. It's incredible. Thank you for sharing that on our channel.
Hey, no problem at all.
Yeah. Does anybody have any questions before we hand over the mic to Chart Picasso. 5, 4, 3. Okay, that's it.
Okay, awesome. Thanks, everyone.
Thank you, Manu. Thank you very much. Mr. Chart Picasso, sir, thank you for attending and giving us your time. The floor is yours.
What's up, guys? I don't know if you can hear me.
Yep,
Hello?
we can hear you pretty good. Yep.
All right, that's fine. I was just trying to get some earphones because I don't really do much audio. Okay, Elliot couldn't be here, so I'll have to do this on my own. Let me just see.
Are you you want to share a screen? Is that what you're trying to do?
Yeah, just getting a file for now. Let me just see.
No worries. Take your time. Who just Miro? What's up, buddy? You know what we'll do at the end, because I know some folks got to go. We'll if anyone wants to stay, I'll get to your trading questions. But right now, we just had Manu give a presentation. This is recorded, so I'll send it to you. Now we're gonna have Chart Picasso talk about his platform too. He's just getting his screen ready. Let's see. I might have to share it again. Let me see if I have to. Okay, so multiple participants can share simultaneously, so that's good. Well, you know, even if you can't share it, you know, we could still definitely talk about it, right? So you're part of Citadel, right? And is that something that you started or you co-founded? Because basically what guys, just to give a little introduction, Chart Picasso has been a member of the channel for a while. He's been posting some interesting things about passive income opportunities and some interesting TA. So I kind of wanted him to come on today and talk about some of those passive income opportunities in crypto. Because I mean, frankly, I have no idea about. He's got a bot that he uses, and actually, Jock actually just came, so this is good timing. And you know, NFTs with these different types of, I don't know what they're called, but you could hold them for a while and make money. And I was like pretty impressed with his bot performance on. Well, I forget what was your bot trading Chart, Picasso? I forget.
That was on KuCoin.
Yeah. So all right, great. He's got it up. All right, you're the man. So the floor is yours.
All right, thanks, mate. So let's see here. Can I round this down a bit? Okay, so basically, we part of Liquify X. What we're trying to do is to try and bring as much liquidity into the market, but from private investors instead of getting like bank loans and all of that thing. So what we do, we started on Iost environment. I'll really skim through this for a while, but the basic token that we have is Citadel token. Let me just get that here. Okay, this is started on the Iost chain. We created a token on the Iost chain. The basic function of the token is to gather people with the same kind of ideals. So just bask as much money together. And these are the very first holders of the token. There's currently 24 holders, including the main account, which is CC888. This was the main account here. All right, so these are the people that believed in the project and got some Citadel. So what this does basically is just join the money. I'll just get to that now. Here. Okay, so this is the token here. What it does, it's join participants in a pool, right? We join all those resources that we can gather through the token, and we open basically trading pools for everyone. So it could be 10, 20 people, any number of people. And inside those groups, we identify people who can actually trade the money on behalf of everyone else, right? Of course, we put some risks into it, so we wouldn't let one person trade the whole account. It could be split among 3-4 people and stuff like that. So the basic idea was to first give out loans, right? So if you hold, say, one Citadel that it's worth $50, you could take up to 50% of that as a loan. So you will be entitled to take back 25 bucks as a loan, okay? And that you'll return with like 10% interest, right? So on the other front, on the Citadel, there was the dividend. After we have like joined this money, we traded it, it starts rolling and we get profits, we will get what is dividends at the end of 1 year, because we don't drop dividends anytime. We wait for a year and people decide after a year if they want to continue trading with the pool, if they want to leave for another project or stuff like that. You can actually leave anytime you want. You can also join anytime you want. So this is the schematics of how that works. If you're a day one member and under 6 months, you'll get full dividends. So you could enter today, we make 50K tomorrow, you are entitled a share of that money, right? If you're a mid entrant, like 6 months down the line, you'll get the full divs minus 50% of those dividends, and the late entrants will get like 365 of the dividends. So we split that in equal shares. This is the risk versus return. High leverage trading, of course, is high risk. We don't do much that. We have like 10% allocation on high risk leverage. We do a bit of Uniswap. We have now stopped that a bit because Ethereum is not playing nice. So we had to stop that. We did jump in a couple of ICOs and pre-sale. We were early into SHIB. So we got some nice returns on that. Okay. We do get some technology acquisition. We're trying to get a gaming platform, but that didn't work out because the guy backed up at the last minute, but that's what that department does. On the low risk end, we have our loans, okay, which is currently working. If I could get the loans on that, let me just get the transactions while that loads. We do have loans. We have some nodes. I've also prepared the node screen here. Let me see if I have that as well. Okay, I'll enter into that just now. Normal staking and stock market. We don't have any stock market person, mainly because of KYC issues and all that. No one is really willing to trade on the stock for now, but we do look at that at a later date. This is so you guys can stop me if I'm being too quick. Ask me anything.
Chart Picasso, could you back up to that previous page?
Okay, this one, yeah.
Yeah.
Uh-huh.
So I was just trying to categorize this, and whoa, it's loud. Is that you or is that somebody else?
No, this is definitely not me.
Oh, it's not you. Okay, so I gotta mute somebody. Okay. Let's see.
I will try and mute for now.
Okay, that was I guess that was the connection. But so yeah, I had a couple of questions. So just looking at your SKU of products here, would you, I mean, I was actually trying to categorize what this product is, and I was thinking this is something a little new. I mean, I've never heard of any. I mean, it's almost like a hedge fund, but it's decentralized or more peer-to-peer, where there's no requirements, and it's mostly in crypto, but there's also loans and things, and it's a pool. So I'm just trying to Like, is there a classification for this product, or is this something brand new that you invented?
Yeah, I was about to say it sounds like a hedge fund type pool,
Yeah.
pool fund.
It does sound as a hedge fund because we're trading on behalf of other people. But the catch here is we're trying to be as transparent as possible. So everyone knows exactly where the money is, and everyone needs to have access to, say, an account in Binance, for example. If you are a holder, no matter how small you are of a holder, you can ask access to see the status of accounts. You know, you can log into any of the accounts. Of course, we still hold the passwords and whatnot. There is 2 directors right now, which is me and Elliot. Hold the passwords just for safety, and there's a number of people who have access to those, including on the pool, so that we have like a more diversified access. So say was I to pass away tomorrow, Elliot will still be able to continue with the project, or anyone within the pool.
And is the fund? Would you say that the who owns actually the contribution of the funds? Would the investors be able to, like, peer-to-peer decentralized pull that out? It's held in a third account, or is it in the
Exactly.
custody? Okay, that's brilliant. Okay, yeah, that's right in the spirit of where everything's going.
Yeah.
So there's no rug pull possibilities. That's what I like about it.
Nah, you can't rug pull because you're basically killing the whole hedge fund. You know, if you disappear, then that's it. You know, there's nothing more to do.
And what's the minimum and contribution and maximum contribution?
Yeah, there is no minimum, there's no maximum. So
Wow.
there is a supply. So let's just go into the Iost token. So there is 1 million tokens. You know,
Hold
this
on,
was the very
real
initial.
quick. Before we go into the tokenomics, I had a question. Now, how would this work? Like, say you do your contribution, and then you get your funds back after you've given your initial contribution. Now, are we tracked on all the trades that are done on the account on our behalf? Like, are we tracked on that, or are we just tracked on what we give the contribution and what we receive?
I'll try and answer that with the current status of account, if that will answer. Let me just get in here. Right. So these are a couple of loans. So I'll come into Roy here. Okay. I don't know if you can see that. Everyone fine with that?
This is your performance sheet too on the right. What you've done,
Yeah.
is that every, what is that time period for those 30.37, 25.3?
So you can see here, this was done on the 21 of October, right? So this is a snapshot, for example. This is the biggest holder right now, and he has 25 Citadeli on that. He's currently collateralizing one of his loans, so he has a 7K loan on his name. Anyways, so basically what we're interested here is to have a snapshot of everyone within the pool, because this token is not used only by us. You could, for example, buy 1,000 tokens from us and go open your own pool anyway. We don't really mind. So basically for this pool, there is 20 people, and there's around 86 Citadel in the hands of people, and that is me there. I have around 20. This amounts to 86 Citadel is there. So what happens is this 86 Citadel is backed by actual money. You know, it's not just out of liquidity. Like, say we created Citadel, we had 1,000 tokens, and we just threw 100 Ethereum into it. So this liquidity was actually captured from the hands of people, you know? So every token on this pool is backed. So what happens after that, let me just go, right. What happens after that, you get a total there. of the current pool. So these 67,000 here in USD, it's equivalent to these 86 Citadel here. That giving you that current price tag. So that's our current Citadel price. And we started at 150 per token. That was last year. So that kept accumulating with every successful trade, every good move we've made, and it got into that every paid loan. We haven't had any loan defaulted. So,
Yeah, no,
yeah.
well, I guess my question, if I would like restructure
Mhm.
it, is for all the trading that's done, are you guys accountable for that, or are we accountable personally for the trades?
Remember, it's backed by the whole pool. So say it was me and you, and I had 60% of the pool, and you had 40% of the pool, right? If
Mhm.
a trade goes wrong, and you incurring a 40% loss, if we lost $10, then you're losing $4, I'm losing $6. I don't know if that's making any sense.
Yes, that makes sense.
Brandon,
But
Brandon,
what I'm saying is,
I think what he's at, I think he answered that before. I think Char Picasso and his team actually makes the trades between 4 people, and that we're not making trades on it. Is that?
we're not
Yeah,
okay. Yeah, yeah, I
it's
guess.
not really that. It's like, imagine the 3 of us are in the pool. All of us can make the trades. You know,
So-
it's not limited to me. If you want to trade and you believe in the trade, you can say, hey guys, I think such and such token can move. Can we have a look at it? You know, everyone is responsible for the
I guess,
pool.
yeah,
It's
so
not
that makes
just
more
me.
sense
Yeah.
now. So there's a group of people who are doing the actual trading. My question was, I guess, going around like taxes and all that kind of stuff. Like,
Yeah.
you know, are we going to be taxed per trade for the
Yeah.
individual just being a part of the pool, as opposed to like however it'll work out?
There is no fees. We're trying to be completely transparent about it. The
Okay,
whole
okay.
pool is accountable for the trades. So there's no fees, there's no tax, you know. There's a bit of benefits for anyone who trade. If you trade within the pool and you trade consistently, then say we do $1,000 at the end of the month, or $100 for simplicity's sake. We just take 5% of that and you split among the traders, you know. So that is like a trader royalty. I can show you here at the very end. That will be around here. So if you are a trader, you will get part of this 5% here for pool traders. You know, 90% gets split among every holder, and 5% gets split among every trader, and the 5% gets split in the community for Citadel. So if you hold a token outside the pool that is not backed by the money of the pool, that token, it's entitled 5% of any profits we make within the pool.
So let's say that I'm a member of the pool and I have a trade idea. So then I would write you guys a message or suggest it to you guys, and then you guys would make the final decision and then execute on it or not, kind of a thing.
You could actually get a sub account and execute it yourself.
Wow. So this is truly decentralized. This is interesting. It's really interesting.
Yeah. We'll just allocate funds to it. You could say, I need $500 to trade on my own. Allocate funds to it. You go get liquidated. You say, oh, okay, it's fine. And then we go try something else.
Wait, how does that work? How does, like, if $700 gets liquidated, how is that fine?
We try not to allocate every fund in one trade. So trades do go wrong. So that's part of the game.
So then you're saying that the return, like say at the end of the month, for example, is based on won and lost trades, like your profit and loss percentage?
Based on various things. If you look at
like, because what prevents somebody from like maliciously going in and, you know, wanting to place trades and liquidating every trade?
That's the thing. You can't liquidate everyone because you won't be allocated a 100% account.
Well, no,
you
not
know?
100% of the account, but like say the ones that you do ask for. Like, for example, if I were to go on there and I'd say like, okay, I have a trade on Bitcoin. It's gonna, it's gonna go through. Can I borrow $700? You guys give me the $700 and then it liquidates. And then I
Yeah.
come back and be like, oh, you know what? It's gonna take off again. Can I get another $700? And then
Yeah,
how does that work?
Let's take that as your stepping stone to education. So you went and got liquidated. You got liquidated with us. It's different with getting liquidated on your own. We can always try again. The basic idea is to never assign 100% to one single individual. You still there, guys?
Yeah, still here. I'm just trying to think of,
Yep.
I'll try and explain it this way. So this is like a wallet. This is the USD value on that wallet. Right? This is Isendex. This is one of the exchange. So it has 6,000 in it there, and it's currently staked. So you will say, I want to trade $800 of this. We'll go in there and get $800 of that. You do have to take care of it, but there are situations that you can get liquidated, obviously. But we'll always set stop losses on those things. But negligence sometimes happens. And
yeah, and how do
that's
you cover
something
for
we
how do
can't
you
stop.
cover for the negligent? Like, how do you like?
We
I
cover
guess,
that by not assigning them 100% account.
Yeah.
And obviously, if you go and liquidate an account, you can't come back again and say, hey, give me another $700.
okay, so like if someone doesn't
doesn't
have a
like
good
that, yeah.
trade performance, like you guys aren't
Yeah.
going to just keep giving them money.
Exactly.
And would you say that most of your, I guess there would be clients or subscribers or whatever, they're kind of letting you guys do the trades. It's sort of the delegating motion.
Yeah, because there's now like 24 people in there and there's only 3 traders.
Right.
So that's how much work it's in there. I'm actually doing trades, I'm doing spot, I'm doing Uniswap, I'm playing Axie Infinity, I'm doing NFT hunting. So that becomes like too much for one person.
Yeah, you do a
need,
lot.
Yeah.
Yeah, I had some people send me messages. They said, "Will you record it? Because I want to." They said you posted some interesting stuff. So yeah, so how you said you've been Citadelli's been open for a year now? You said.
Yeah, exactly.
And would you know what the performance is for the whole year of the fund or whatever you would call it?
Yeah, you can just check that on the token, because the token started at 150, so it's a 2x, 3x by now.
That's impressive.
3x. Yeah.
Yeah, it's very.
Because we had people pull out like large sums of money. Let me just go into one of those updates. For example, here there was a 44K cash out here.
Okay.
It was a 86K cash out here. So there have been some heavy hitters here. This guy just has one now, but this guy used to have close to 45 tokens. Mm-hmm. And at the time before he left, he was worth around 110K on a pool of like 24 people. It was massive.
So you had a 300% return in a year, which is fantastic. And what was your your volatility, your drawdowns like?
Yeah,
crypto, but I saw your bot and I was like, so is your bot doing a lot of the trading too, or at least for Iost? That's a separate question.
Yeah, the bot came later on, around mid-year, because SHIB took that dive after Vitalik sold. So we had the SHIB that we already bought, then we decided to like throw that into KuCoin and into the bot, and the bot went out of range. So we had to hold that bot through the bear market. so I can say.
Now, does
Yeah, and through the bear market, what's your performance?
is the bot short, or is it mostly a long base buy?
Yeah, if it gets out of range, let's say you have a token that it's ranging between 2 and 10, right? So you will just set the bot and say, okay, my low figure is 2, my high figure is 10, and then you'll split it into grids, say 100 grids. So it'll just dissect the bot into 100 parts, you know. As the trend goes up, it will keep selling. If it comes down, I mean, it will keep selling. If it comes down, it will keep buying and averaging up. So you'll never get a 2 average anymore. You'll get like 3 or 4 average, you know, and that becomes an up and down until it goes out of range. The only problem here is if it falls below 2. Once it's below 2, it's completely out of range, and you need to now consider, do you close the bot, or do you just let it run and you use that as your DCA strategy, and you go buy some more on the market and just wait for the bot to come back into range. So where we
Yeah,
basically,
so like, do you guys
yeah.
program stop losses and take profits, or is it open-ended trading?
Yeah, KuCoin currently, it does have stop losses, but at the time they released the bot, there was no stop loss. So as soon as it went out of range, it will ping you and tell you, okay, this bot is out of range. What do you want to do? You know, if you close it, it will sell at a complete loss. So closing, it's usually not an option. We just let that bot ride. What we did though was to adjust the parameters. So as the trend went out of range, we just set like 10% below range. So from 2, we could set like 1.6 and let it run within that range. That's how we did our profit on most of the bear market. It would rake in like 100 bahts daily, if not 150, something like that.
And so you have to buy the tokens to participate. One token is right now about $789, 788.14
Yeah.
cents.
So
And
I'll try and explain that part now, because there's an event that happened at the end of the year, last year. Let me just get that. All right. So we closed last year's pool on the 21st of August here. All right. So what we did, we ran an even distribution of tokens. That whole 1 million tokens got distributed to every holder at the time. So I'll just get those holders at the time. It's 21st. All right. This was the snapshot at the time. So every single person here up to this person. If you can see here, Ouroboros has a 25 snapshot here at the time. But in reality, if you go to the blockchain, you will see that Ouroboros has around 410,000 tokens right now. Okay, so he got all those extra tokens from this event, from the distribution here, because at the time he was worth maybe 70% of the pool. That's why he has all those tokens now in his possession, you know. So where we're interested here now, it's only at the current snapshot. At the current pool, he only owns 25 of those tokens. So the remaining 409,000 tokens, he can do anything he wishes with them. You know, he can sell them in the market. He can get new members to join us on the pool. He can set any rules to those tokens. So that's what's happening. So for you to get in the pool now, stop me if I'm being too quick, you will need to just the right link. You'll need to go into this otbtrade.com exchange IOST Citadel, because we were born in the IOST blockchain. So that allows us free transaction fees, right? Ethereum doesn't allow us that. when this thing loads. On that side. Okay, hello. So if you can look here, these are the people currently selling Citadel, right? And this is one of the members and it's selling it for 10 Iost. This is the market value of Citadel believed by one of the early investors, so I can say. So how does this come about? It comes about on this scenario here. Let me try to load them. So basically what you will do, you will buy your tokens on one of the exchanges for 10 Iost right now, and you would have, say you bought 5 of these tokens, you will have 5 Citadel, but you have 5 Citadel that it's not backed by any money, it's just backed by your 10 Iost. But you now need to be informed in such a way that you know that, okay, Citadel is not really 10 Iost. So what am I getting here? You're getting unbacked Citadel. So how do you get into the pool? You'll need to back it up with the current price, right? You'll need to supply the pool with 788 USD for each Citadel that you hold, and you automatically jump into this snapshot here. You there, guys?
Yep. Yep.
Yeah. So you literally need to back up those Citadels. Because, okay, I can buy this Citadel. Let me just run you through an example here. If I have any Iost. The CC account. Okay, let's go there. All right, I actually have some Iost there.
Marcelo, what was the impetus for this idea? Like, how did you come up? What was the inspiration? How did you come up with this idea?
We actually ran something similar in real life, but we ran it with fiat currency over in Mozambique. So what we do is we pull money together in a community, you know, and from that pool of money, you will give a loan out to the participating members. So those participating members, they will go do anything they wish with that money, and then they will return 10% into the pool. So we just added a few more tweaks into that same idea, with the only difference here is that we collateralize the loan with your own tokens.
Okay, that was a question I had.
Yeah, yeah. Because if you join a pool and there's no token to collateralize, then people will easily run away with money, you know. But if there's collateral attached to it, then there's no way they can just default it, because those tokens, if you have $1,000 and you take $500 loan, we at least have 10 months backing of interest in the pool. So you actually have to pay that back.
What about if somebody like were to use a token as collateral and then the value goes down? How does that calculate in the repayment of the loan?
Okay.
Or
so what we do is, say you have $1,000 and you borrow $500, right? And the price of Citadel is volatile, as you can see. But before that loan leaves, what we do is we stabilize the loan. So I'm not sharing different things here. You will stabilize the loan. You will do something like this. This is the total in Iost. We'll stabilize it into USDT, right? So at the time,
so when you take in the value for the loan, you put it in like an escrow, a USDT escrow, until the loan is fulfilled, and then it's repaid.
Yeah, we just go into the accounts and see what we can turn into USDT. So if we have $500 in Ethereum, for example. We just give you that $500 in Ethereum. But now we convert the registration here into USDT and everything is USDT. So you will have to return that in USDT.
Okay, and what if like Ethereum were to go up? Does your USDT value would stay the same, correct?
Yeah, exactly. So we had a similar case like that. Someone just took a 10 Ethereum loan, you know, and they wanted to pay exactly 11 Ethereum because it's 10%. But then the price of Ethereum soared so high, but the guy just came back and said, okay, guys, now I need to pay in USDT, you know. So we had to have a whole, we had to have a whole vote on it, and we decided to stabilize the loans from there on, you know.
So, I mean, just based on how many spreadsheets and how many different services this it offers, it seems like this is a big part of your. This takes a lot of energy to manage, right, Marcelo?
Yeah, exactly.
Is this your full-time job?
Yeah,
It's
this is
awesome.
my full-time job. I'm self-employed right now.
Nice, nice. And you have use like a website or a Telegram channel too?
Yeah, good job, man.
Yeah.
Good job. If you have some links, would be awesome.
Yeah.
You know, some
Yeah,
links would be really cool.
I would say we do have a shell of a website because everything is decentralized. We got a website running. Let me see. There. Okay. But you would need Unstoppable browser. That thing over there. Let me just see. To show you that. You will need this plugin installed on your Chrome. So how I will access once I have this there, I'll just say crypto.
Where are you from? Where are you from, Marcelo?
I'm from Mozambique.
Pardon?
I'm from Mozambique.
And that's in Africa?
Yes.
That's cool. It's very cool.
Yeah, I work with plenty of people out there in Africa. You know, it's pretty interesting place. I mean, and crypto right now is booming in Africa. You know, a lot of people are getting into it. A question that I have, is there a reason why, like, you know, some of the social media infrastructure isn't built up yet? Is it because, like, I mean, I know I've launched projects before and it's been my thing because I just haven't had the time to get to it. You know, like I'm working on so many different things, you know, it's just I can't double back yet. You know, do you guys have plans to change that in the future?
Plans
to change that, like to upgrade your website, to make it more publicly
Yeah,
available, social medias, all that kind of stuff.
The reason why we went and bought an Unstoppable domain website because there is no salary in this thing, you know. If you wanted to run a full-on website, you'll need to start paying, say, GoDaddy for the domain. We'll need to start paying for the emails that we keep and all that. So we'll need to get a full-on domain. You start telling people that, listen here, we're taking so much money to run our website, kind of thing. So we wanted to keep everything decentralized and simple, you know. So no, there's no rush to get a proper website running. There's no such rush. Yeah.
Marcelo, are you a programmer?
I did do C++ and I did do Delphi in university, but it wasn't in depth. It was like for 6 months each. I do understand the language, but I'm not a full-on programmer.
I was just asking because I was, you know, I guess to set this up, did it require a lot of API connections, and did you have to have a background? No,
not really, because the token itself, it was on Iost tool. Yeah, there we go. So with Iost tool, you can create an actual token on the Iost blockchain. If it doesn't need a lot of smart contracting, then you could have. It's not working. But anyways, just look for that on your free time. IostTool.com. That will allow you to create the token.
And how did you create up the like the third-party custody of funds? Is that because you said you could create the token through that? Did that require a programmer's background?
This is gone dead. The third party, like listing over here, we contacted these guys and we told them all about the token, because you can see now we are on the official side. We didn't start on the official side. We started here on the peer-to-peer. So they just listed us among all these other tokens here. We were on the peer-to-peer. We were born on the same time as PMine, but this is long dead. You know, they were like one of the big guys on the IoT environment. That's what happens. You come into OTB trade and you simply say officially list the token, right? And they decide if you belong into the peer-to-peer or official side. We went on this when we got our first 8 million IOST order in.
Oh, cool. There you are listed.
Yeah.
Yep. So
Now, do you guys have a
okay.
for
Right.
the actual execution of the trades and like the pool sharing and all that kind of stuff? Is there terms of service or privacy policy contract or document or anything like that?
No, there's no such thing. There's no such
Not
thing.
as yet.
Yeah. We are registering because I did prepare that. Let me just see. Cool. So around the same time, that was last year, 18 December, right? We started a bit earlier on that. Me and Elliot registered the company, you know. So that's me there. That's my real name.
Okay, so the
Don't tell
company is
anyone.
registered.
Yeah, it's actually registered. You can look at that company number in any UK website register. It should come up with Liquify X, you know. This is the office they assigned us. I've never seen it because I'm not yet in the UK. Someday I might visit. And they also assigned us an accountant, and they gave us a free domain. We're not actually using that as yet.
Okay, so this is the Liquify YX Ltd. Okay.
Exactly.
I'm just gonna say, like, why did you choose London? Because but I guess that's because it's through the Liquify, right?
Yeah, I chose London because Elliot is there. You know,
Ah,
I didn't register in Mozambique because they'll start asking, yo, what's this? You know, they wouldn't take me serious. You know, I could register it in South Africa because I have some ties in South Africa, you know, but I have like 4 other companies there in South Africa. Didn't want to open any other in South Africa. So I gave this one to Elliot. So we both directors on this in a 50-50 share. You know, I signed for the documents when they first registered these accounts.
Well, very cool. If people wanted to learn a little bit more about it, do you have some info that I could, or you could post, or I could share with people in the channel?
Yeah, I did share my PDF with you guys. I'll try and share it again.
Okay.
The website, it's not coming on, but definitely install the what's that, the Unstoppable domain browser. Let me just.
Why can you? I'm just curious. Why can you only view that in Unstoppable? That's weird to me.
Because it's an IFPS website. Let me just. It means it's not on any central domain holder. It's not on GoDaddy. It's not on Google. It's not on Bluehost. It's sitting on people's computers. So it's the crypto of websites.
Very cool.
Exactly. So you simply just Unstoppable browser. Let me see if I get it. All right. If you do have Unstoppable browser installed on your PC, you will simply go into citadeli.crypto. That will take you to this website without fail, you know. So if that fails, you simply go into iostdex.io, right? And you will find our token listed here among all these other ones. There is Citadel. If you click on introduction here, there's the website there. You see all this gibberish here. This is because it's on blockchain, you know. So it will start requesting on every other PC on the world, and it will bring you this. And that's our team there.
And what's the performance fee?
What do you mean by performance fee? Elaborate.
Well, you know, you guys are doing all the four managers, or you had a 300% profit. So wouldn't they, you know, like a traditional hedge fund usually gets around 20%.
No, we don't have that. Everything is split equally.
Really?
So say we made 100K and you own 50% of the pool, you are entitled to get 50K. You
So
know,
where's the incentive?
the incentive is the 5%. This section here, as I showed earlier, let me just the incentive for the traders is this part over here, this 5%. So on all the profits, 10%, 5% is for the community, and 5% is for the traders.
I'm sorry, what was can you say that 5% thing one more time? So
Yeah, because it almost seems like, I mean, if I was a non-pool holder in the community, I'm getting paid just as much as someone who's trading for the pool, right?
Definitely not, because outside the pool there will be a lot of more tokens, you know. So inside the pool there's 86 tokens. Outside the pool there's like 990,000 tokens. So that 990,000 tokens need to get 5% of that. You understand? So if there's like 500 more holders outside the pool, I'll need to split 5% among 500 people.
Okay, and then the traders or traders themselves get 5% of the pool that they're trading.
Yeah, just to give you an example.
So Marcella, whichever, like you said, because you know anyone can make a trade or whatever. So whoever makes the trade and it's a winning trade would get paid 5% out of the profits
at the end of the year.
At the end of the year, okay, cool.
Yeah, all returns. Yeah.
Like rewarding.
So then it's like each one of the pool. Oh, sorry, Matt. Did you want to continue?
Go ahead.
So then each one of the pool holders potentially could become traders, would potentially have their own, like you said, sub accounts through Citadel, and they would be considered Citadel traders.
Definitely.
Okay, and how do you vet? What's your vetting process on just letting somebody come in and trade? I know I circled back to that again, but I'm just curious, you know, how you allow people to just come in and trade on the platform.
Yeah.
Like, is there a what do you call it? Like an intern process, or you know, like a trial or something like that?
I think what Brandon's trying to understand is the trust system. You know, the reputation trust.
How do you trust the people? You know, because this is crypto. You know, it's hard to trust anybody. Like, how do you know?
So let's say you came in with 80% of the pool, and you came and asked for 80% of the pool. Do you think I'll deny you access to that?
Well, I don't really know how the structure's set up, but I mean, if somebody had a bunch of money and they came and they wanted to trade, I mean, obviously you'd want to take it, right? Or not take it, but use it, you know, because then that's profit, money back in your pocket.
Exactly.
But
so
I mean, with the same, you know, perspective, you know, what keeps like 5 people from then pooling their money together to create 80% of the pool, and one person comes up with the trade?
Exactly. you know. So the trust first starts from the money you put. So if you want to put 80% of the pool, then definitely majority vote is yours, you know, because that's one of the rules. If you own that much power within the pool, then you need to know everything that goes around the pool, you know. So let's say someone comes in and puts in 1% weight into the pool. Of course, we're not going to give him 50% to trade it, you know. We're going to give him a minimal account. So everything is, it's right at the beginning. It sets out right from the weight you put behind the pool, you know. If you trust on the pool, then the pool will put trust back into you. If you don't trust on it, then the pool won't trust back their money on you. It's as simple as that.
And then what are the turnaround rates? Like how long is your capital locked up for? What are withdrawal phases like? You know,
Right.
how do you go
So
from returning your
we
capital?
we only pay people once a year, right? But within that 1 year, you can enter and exit at any time, you know? So you're not locked up to us. If you come in with 50K today and tomorrow you need your 50K back, provided it's still there and the account still allow you to take out 50K, then we're going to give you your 50K back.
But the profits, let's just say there was profits on that 50K. Those
Exactly.
distributed at the end of the
If you come in with 50K today and we make, say, a 3x trade, you know, that's already 150K. So you're entitled to take out anything you wish from that, including profits.
Yeah, I mean, that's interesting, you know, because I had like I was telling Manu, I was asked to manage this fund that was going to use this enzyme protocol, which was like a decentralized asset management pool, but we were still going to use, there was like a traditional LLC that was incorporated somewhere, I think in Delaware or Florida. And, you know, it was all set up legally, but it wasn't, but it was going to be like on the books, you know, in terms of like having, using traditional entities. But it seems like this whole structure is completely blockchain. And it's even seems to be even more decentralized than what I was experiencing with Enzyme, because it allows, you know, for various traders based on their pools to make more decisions based on governance and voting, while this one was just based on, you know, me and maybe one other person making some decisions.
Yes, exactly. We're trying to educate every investor, because, you know, some people just want to sit down and have someone trade for them. We actually try to educate as much as possible and let people decide on what we should do with our money, instead of, hey, hedge fund, manage this.
Now, do you guys have some sort of educational platform?
No, not yet. The group meets every day on Telegram. There's a private group that just like yours, you know, and we make all decisions within Telegram.
Okay, so say for example, I'm just thinking about like if you start when you start bringing people in, right? That would work on a one-on-one basis, you know, for
I
a little
usually
bit.
take the time to explain everything, anything that they
And
want to
yeah,
know,
that's
and all the
awesome.
ins and outs. Yeah.
But what I'm saying is like how we could streamline it, you know, so that way more people would be able to read more of the information at the same time.
Exactly. We do get a lot of that, like, your product is too hard to understand, and we're like, yeah, that's actually part of the idea, because if you can't really manage the blockchain, then you will lose funds. You know, you won't be a good trader. We will need to build you from the bottom up. So you need to have a bit of background on these things. I'll try as much as possible to teach people how to board into Iost, because it's a bit of a difficult chain to get into. But yeah, that's part of the job. If you're running the pool, then you need to board people.
And then it's broken down basically into three pieces. You have your IOST, which you use to enter and exit the pools. Is that correct?
Yeah,
And
you can
then
enter within Iost, right?
ISP,
But
and
you
then
can exit in any other format.
Okay, you can exit in any format.
Yeah,
And
but
then
you still need to
Citadeli.
return the tokens.
Okay, you need
Because
to
that's the
return
only way
tokens.
we know that you're out of the pool. It's like your share certificate, you know? You can't cash out without sending back the tokens.
Marcelo, if someone asked me in one word to describe this product, what would you call it?
Sorry?
I said if I asked you, like, if someone asked me to describe this product in like 1 or 2 words, like, you know, what would you call it? I wouldn't call it a hedge fund, but what would you call it?
I'll call it like it's a decentralized trading platform.
Decentralized trading
platform.
Yeah, that makes sense. That's what I was going. Yeah. So it's almost like if you had a trading room and they decided to pool together, this would be a way they could do it fairly with each other in a way where no one owns custody of it. Which, you know, when you have custody of something, then you got to deal with the government because you're managing money. That's really smart.
Yeah, and somewhere where you can actually tell people what to buy, because you know you give your money to hedge funds, but they actually buying whatever they wish with. You know, you can actually tell me, you know what, I want to get 5,000 of banana, and I go get banana.
So it's like a brokerage too, in a sense that you could have, you know, a relationship with one pool member who, you know, could, like you said, request a certain thing.
Yeah.
And I was going to ask you, how does your country cryptocurrency, and what are the taxes like?
Sorry?
I said, how do you pronounce your country? Mozambique? Mozambique. I was going to ask you, how does your country, how does your government relate to crypto? Are they favorable to it? Are they, you know?
They're not against it, you know. I do have a bank account that it's working fine with crypto within the country. South Africa as well, I do have a bank account there that it's working fine with crypto. So far, it's not being banned. It's not being spoken of. You know?
I like that.
Yeah, Matt,
it's way better. Marcel, I was just going to say, and Brandon, 1 sec. It sounds like your country's got a way better attitude towards it than the United States. I had my key bank account. They were calling me like every other week because I was doing crypto trading, and finally I was tired of answering their questions, and I went in and I closed it, and then I went to like a small mom and pop's bank, and they're like, yeah, we have no problem with anything that you're doing.
Yeah,
we'll take your money. So.
Exactly, because I've cashed out a big chunk of some of my gains on the banks in South Africa, and I haven't had any problem. You know?
Yeah. So, you know what's so funny? I have a Binance account in South Africa. I have a friend who's from there, and he helped me set it up. And they still haven't reduced because I don't have a KYC there. They haven't reduced my withdrawal limit. I still have 2 Bitcoin a day, while as my friends in Mexico, and every other country I know of, they reduced it to like 0.06.
Exactly, and if you are in South Africa, Luno gives like free withdrawals. You just give like $20 to them, and they have free withdrawals.
Yeah, the way things like the workings that I've done in Africa myself, they haven't really like looked at crypto yet. They've let crypto come in and work in the economy, right? Because you know they're trying to boost the economy, making more money and all that kind of stuff. But they haven't really started to pull from it, not pool, but pull from it. Do you know what I mean?
I mean, it's smart. They're just letting the free economy work naturally.
Yeah.
Come in and
because if the people make money, then the economy's going to make money.
Yeah, exactly.
Well, I just want to thank everyone who came on the call, and Manu and Chart Picasso. Thank you for making your presentations. You know, if you wanted to, you could whatever you want to you post about your Citadeli, just send me a DM and I'll post it on the 2.0, so it'll be in both of them.
All right.
The first one.
Yeah. And I'll send you the files. I'll send you the websites in both formats and everything about it. Yeah.
And I mean, if it's okay, I wouldn't mind taking a look at the PDF either.
All right. That's cool.
Very cool. Well, does anyone have any last questions? Because we're just going to wrap it up. I just wanted to thank everyone for coming on.
I'm good. Thanks, Matt.
Yeah.
This is great.
Awesome. Well, thank you, everyone. And we'll do it again next week. God bless.
Thanks,
Cheers.
Cheers.
Peace.
Have a good one, you guys.
Thank
Thank
you.
you.